All right, we are live. It is 9:28 in the morning. It is October 31st. Happy Halloween. And we are about 2 minutes from market opening today. Thank you all for joining me. For those that are new, the point of this channel is a journey into growing an account slowly and very risk averse. No YOLO plays, nothing that is high risk. The idea is, I'm teaching this to my dad or my grandpa or my grandma or my mom, whoever it is that wants to learn this and wants to conservatively create income and grow your account, then this is what we're doing. This is what we're following. I cover a few different strategies on my channel. But the reason why I do this and I do the live podcasts or reviews is because I believe that selling options is like riding a bicycle, and it doesn't matter how many manuals, how many videos you watch on them, you have to get on the bike eventually. And once you're on the bicycle, you have to keep riding and keep pedaling and forming this community and really being transparent about everything is how you build trust and how we all get through the good times and bad times. So that's really the point of this channel. Follow me on X and YouTube. Both of those are where I'm most active. Now, having said that, today's main channel overview is going to be going over what I have open trades, kind of what the outlook is on the trades, how I'm preparing for Q4 to kind of end the year off. And then also I want to cover the trade tracker, which I'll do now. I'll start off with that. Tracking your trades is probably the most important thing that you can do if you're going to take this serious. And it's for multiple reasons. And you'll see when we get into the individual trades, when you're rolling, you need to know what your net credit is or your net debit is. You may have gone to credit before and then you paid a debit after. Well, how much money have you actually made? And knowing that basis also gives you an upper hand on maybe cutting a position short early before it actually expires, but cutting it at a profit instead of a loss. You need to know exactly what that number is. So tracking your trades is the most important thing. I've developed my own. I know there's a few wheel trackers out there. I think it was Bill White and TJ the Wheel Deal have a phenomenal one. I had already created one from scratch that I like. I use it. It's very simple. It gives me everything in one screen. If you want it, please DM me. I have no issue just sending it to you. Let me cover it quickly so we all know what it is that I'm talking about. So this is my wheel tracker, and it starts with this, page 1 right here, right? And page 1 is just a summary of how many funds, how much money you've funded your account with or how much money you've taken out. That's important to know because you need to know how much money you've actually made. And you need to track it. Don't let Robinhood track it. And then each tab is a main stock that I'm trading. So the tabs are for the stocks that I'm really wheeling. The ones that I really believe in them long term, the ones that I want to keep. And then at the end, I have my side quests tracker, which is, those small trades, swing trades, dip your toe trades, those kind of trades is what I put here. So if we go, for example, to SoFi, right, what you're looking at is a following thing. You got the stock here. This green number here is the total profit generated from all options sold. And here, basically, what we're looking at is the date that the option was opened, what type of action it was, whether it was a covered call, a put, when it expired, the strike, how many contracts I bought, what my premium was on those contracts, and what my total credit on that was, right? And here it tells me the trade is closed. That's the first leg of the trade, right? The second leg is when you close it. So for the trades that I have open, I obviously haven't put anything on the right because I haven't closed them. So at a big picture, at a glance, I can tell which trades are the ones that are still open and which ones are the ones that are closed. And then if you see a few trades that have a box around them and an X here at the end, it's because these have been rolled, right? So I like to sandwich them so I know exactly on that position where I need to be to manufacture that win, right? So we'll get into SoFi in detail, but here we have day closed. What was my closing cost per option? My total debit, my total closing cost. So this just multiplies what my closing cost was times the contracts, right? And then here it gives me a profit. So it basically just takes how much money I made from selling the call or selling the put in this case, how much money I had to give back, and it tells me how much money I made and what that return is on my collateral. That's it. Keep it simple. And then here on the right side, we have our shares. So we have our shares on the right side and we have our options on the left side. So here what it's telling me is this is my history of buying shares, right? So I own currently 1,000 shares at $10.32 is my basis, because I like to track everything. You know, when I sold them at $6.50, what I made back from them or what my cost was. So this isn't just, this shows me the full cost basis on the life of the stock, right? Which is what I really want to know. It's what's my actual cost basis. And then so that's what this bottom part tells you, the shares and everything you bought, the date you bought it, the amount that I bought, my cost basis, the total amount, right? And then up here, it tells you total profits to date. So this number literally just feeds from up here. Shares owned, so this number feeds from down here. Basis, so that feeds from up here. And my adjusted basis. So basically what it says is if I paid $10,318, but I made $5,000, then my cost basis is around $5,000 and change, and then I divide that by 1,000, which makes my cost basis $481. That's pretty much it. That's the wheel tracker for me. Very simple, right? And I adjusted based on the strategy. So if I go to Intuit where I'm doing the Poor Man Covers Call campaign, you know, I've got my puts that the calls that I bought here, the long dated calls here, and then all the calls that I've sold on that position down here, right? And then this is my Poor Man Covered Call summary, if you will. And we'll get into this. I'll show you guys how I use it. So that's the wheel tracker. If you guys want it, DM me. I'll send it to you. No big deal. So right now, markets are fighting to be green. Market just opened. Let's review the trades, especially the ones that I have expiring tomorrow. So CleanSpark, as I've mentioned before, is one that I'm trying to really get out of. You know, I don't want to be playing two Bitcoin miners, Riot and CleanSpark. And if I was to choose one, I'd probably choose Riot. So these shares are 100% for sale at 13. And we're almost there. I think at one point, CleanSpark touched 13, if I'm not mistaken. This is July. It touched 1255, 1286. You know, it's 13 is what they're for sale for. So basically what I'm doing now is I'm just wheeling it. My cost basis was very high. You know, if I go to my wheel tracker, my cost basis is $19 a share. So it's not great. It's not great. But by selling options, I've generated $3,900. So my adjusted basis is $11.96. So it's $12. Is pretty much my basis, which is more or less in line with what they're showing here. I don't know if Robinhood is now calculating that into your average cost. That would be interesting to know. But essentially, I've got 3 $12 calls expiring tomorrow. It's at $11.65. Not concerned about these. I'm going to let these ride. I've got a $12 put also expiring. So this one I may have to roll down. Or I can close it for a profit, actually, which would be pretty cool. And honestly, that's probably what I'll do, because I don't want to have – the markets are a bit shaky, and I don't want to have too much downward exposure right now. And I don't know how Bitcoin's going to react to this election either. So given there's about 1 day left on this contract, I may close this out early. Close it out for a profit, close to 50% profit. It's currently trading at 48, 49. So let's go ahead and see if we can close it for 40, 45. You know, I may even go up to 55. You see how I went up to 50 already? It's not good. That means that CleanSpark is going down. And so if we look here, you know, CleanSpark, for example, is at $11.65, but I sold $12. So there's $35 of difference, right? So that's $35 of extrinsic value. So $35, and this is worth 55 right now. So that means there's $20 left of intrinsic value. So if this was to stay the same price and I was to close it tomorrow, I could get it for cheaper. But you don't know what's going to happen. But for the sake of this, since I couldn't close it at what I wanted to, I may just keep it and look at what CleanSpark's doing. Oh my God. Do we have earnings or something on it? In a month. So we'll leave that $12 put. I've got 2 more $12 puts next week. And I've got a $14 call. I'm not concerned. And then another $12 call for next week. So look, I think the conclusion with this particular stock is let's just see what happens. I will add a few reminders here that let me know if it breaches 1150, which I think we had, but I'm also going to add if it moves below 1130. And then if it moves above 12, that'll also let me know. So we're going to leave CleanSpark just as it is. Intuit. Intuit has been super interesting because yesterday it went through the roof. I mean, look at this. It went all the way to 626. Now, Intuit, I'm running a poor man's covered call campaign, which pretty much just means that I bought a few long-dated calls, 690s. This was a while ago when it was trading pretty high. And I've just been selling calls on it for the past couple of weeks. And pretty much right now, if I was, let's update where we're at. So these are all the calls that I bought. At one point, I had 10 calls at one point, and I paid about $17,000 for these calls. That's sort of where I'm at right now. Now, as far as premium generated from the calls that I've sold, and this was started back in 8/22, I've generated close to $19,425. So I've officially covered what I paid for, which is always a good feeling, right? The question now is, how can I maximize my ROI? So what this table here is telling me is these are the total contracts. Zoom in here. These are the total contract costs. So this number comes from here, right? Which is my calls bought. I've closed 4 of them. They actually expired because they expired 10/18. I have a few December ones open. I think I have 4 December ones open, or 5. Current value of the options, right? So the options themselves, you know, they're not at zero. They still have value, but that value fluctuates a lot. And right now they're worth about $715, right? So we update what their current value is. Premium generated simply means the addition of all this premium I have here. Pending premium is premium that still hasn't been clocked in yet, but that will expire tomorrow. So I have to keep a close eye on those trades. And then here it tells me what my P&L is, what my profit or loss is. So I've made close to $7,000 running this poor man cover call campaign. ROI is at 38%. You know, it's been interesting. I've gotten to know this stock very well. I don't know if I would own into it, but it's been nice generating that money from the poor man cover call campaign. Poor man cover call is a phenomenal way to really squeeze your gains. And it's a strategy that a small account could easily do. And I've been running a small I've been running the poor man covered call campaign on a few other stocks that I'll show you now that are very small. Even with $1,000, you can get started on that. So let me just finish here with Intuit. So we have a few calls with Intuit expiring, right? We have a 625 expiring on Friday tomorrow. Where are we right now? We're at 616, right? So, and I may close these 622s or even these 620s. Oh, that's a put. So I have a 625, which I'm okay with. I have a 622 fives, may have to do something here, or I have a 630, and I have a 630. So that's 1, 2, 3, 4, 5. These are my call options, right? The reason why this one scares me a bit is because yesterday we were underwater on this. Right now it's at 616. I'm up $120 on this. You know, it's not. But what I could do is I lock in my win here for 120, right? So that's, or 124. That's yeah. So right now the potential profit on this trade was $310 per share, per contract, right? But right now it's worth 248, 245. So that means I've really made $65. Oh shit, 208. You see, and that's really why this stock is very volatile. So I made $100 per contract, right? So the idea would have been to close this out and then open up a 630, for example. That's a little bit more risk averse, right? So I would have locked in 100 on that one, and then I would have sold this one for 100. So I would have locked in, I would lock in a $200 win, right, on those contracts, as opposed to a 310. So I would miss out on $310. I would miss out on $110 because I'm making 200. I don't know. That may be something I do, to be quite frank, because I just don't know. This stock is very unpredictable, and I don't know if this thing's going to go back up tomorrow to 620. You know, it could do this, which it did yesterday. It stayed up here, but you know, it doesn't look like it's going to be quite frank, and it already kind of breached this 620, 621 kind of resistance that I was kind of looking at. So I'm gonna take that risk and let that fully expire. I'm not concerned about Intuit anymore. What I do want to do is make sure I have my alerts on just to keep track of it. So I'm probably gonna put an alert on. Right now I have 623. So let's do 618. And then here we'll do 620. And then here we'll do 614 or even 615. And then we'll do 613. All right. This gives me a pretty good idea of how it's moving. So we've got Intuit, Riot. We had a pretty interesting conversation yesterday. $1 million cash grab with TJ the Wheel Deal. Sold some interesting puts on Riot. I am going to try to free up some capital because I really like Riot, and I'm going to join him on those puts. So let's see where we're at here. It's down 5%. And I've got 10 8.5s expiring tomorrow, 15 9s, and then I've got one $11 put expiring November 22nd. This was really a backstop trade. Yeah, I need to free up some investment capital, but I think tomorrow's expiration is going to free up a majority of it. So I've got Riot. All right, so Rocket Lab. Rocket Lab is one of those poor man covered call campaigns that I'm running on a small scale, right? So what I did is I bought two $10 calls for January 17th, right? I'm not sure if these are worth much now. So I'm down $60 on these. These are little lottery tickets. I paid $225. They're worth about $195. But I sold a call on them, $12.50 calls, which brought me in about $60, right? So what does that mean? $60 isn't a lot. The way you have to look at it is my cost basis went down by $60, right? Or $30 each. So it's really $195. So if I was to sell these contracts right now today for Rocket Lab, or I'm sorry, on Monday after this call expires, I'd essentially break even. Give me 1 second. I got to blow my nose. Okay, so that's pretty much the move on Rocket Lab. We're just kind of monitoring it. There's a lot of excitement around this company, and I wanted to kind of dip my toe on it. I wanted to partake in the upside, but really limit my downside, right? Because if Rocket Lab goes to $5 tomorrow because they're having issues with some launch, my total exposure is the $400, as opposed to the $2,000 I would have had to spend to buy the 200 shares. And that's really it. And I'm going to just continue selling calls on it until my cost basis is zero. And then in January, I'm going to decide whether I exercise these and buy them at $10 or just let them go. Very, very easy. Vanilla. Rocket Lab, SoFi. Let's go to SoFi a bit. SoFi's been the hot chick at the prom lately. So let's talk about SoFi. So SoFi is red. We'll have a pretty decent cost basis. I've got $8.50 call, which I'll probably just roll. That's expiring tomorrow. So let's go ahead and roll this one. I'm not sure if to just let it get called away. Let's see what rolling looks like on this. With SoFi, I had a very interesting come to Jesus moment, if you will, on my portfolio with TJ yesterday. And basically what he highlighted is, what's your goal with your shares, when you first started? Because when you first start, before you get caught underwater with shares, a lot of things happen and a lot of things go through your mind. Do you want to fight for the shares, or do you not want to fight for the shares? If you do want to fight for the shares, you may have to take a loss and cover before, as you see it going up. But if you're just focused on a profit, then you can let them go. And SoFi, to me, I don't really use the platform. I think what they're trying to do as far as the bank license with the technology intersection is interesting, but I haven't played around. I'm not a believer in it myself. And so this may be a trade that I may start dwindling down a bit. If I see a pullback, I may jump back in. But just for the sake of rolling, let's see what we can do here, right? So we have 8.5 expiring tomorrow, 244 worth on that call, right? So 8.5, and right now we're at 1092 on the stock price. So that means that we have $242 of extrinsic value. So that means there's really no intrinsic value left on this stock. There's nothing. It's all share appreciation. There's no really time left on this stock. So let's pretend that we are going to roll it to November 29th, right? How far, if I was to give them a month, how far could I get? I could get to 8.5. So pretty much stay exactly where I'm at, or go for 9 for a $39 loss, but I get a $50 share appreciation. And truthfully, I don't know if I want that, because I'm really only going to be making about $30, but I got to tie this up. I got to tie my capital up. I got to tie almost $1,000 up for a month for $50. So I may actually let this one go. Now, the only thing that's kind of limiting me from letting it go is that this 8.5. So I have 1,000 shares, and I have 1,000 shares already assigned for here on the 7 and 8. So the question becomes, where is this sell coming from? And it's coming from this $10 call that I bought, and if I let it get exercised today, I'm really going to be losing on a lot on my whole premium. I'm going to lose my whole premium. So what I'm going to try to do is I'm going to roll that 8.5 as much as I can to match it with this expiration date, which is January 17th, 2025. So I'm going to go over here. I'm going to roll it, and I'm going to go to January 17th, 2025. And I'm going to do a $9. I could do this one. It's going to cost me $14, but I get $9 of share appreciation, but then I got to buy them at 10 because that's my long haul, right? So what I'll do is I'll probably do this, do a total debit of 135, because do I think SoFi is going to be above 11? Perhaps, most likely, yeah. So what I'm basically telling Robinhood is that come January 17th, I'm going to exercise my long call and buy them at $10, and then I'm going to sell them at $11 because that's my call that I'm selling here, right? And so I'm going to be making pretty much $100 on that share appreciation, but this is going to cost me about $134, right? Which is, I really got to do the math. I really have to do the math on this call because I really want to, and I'll go ahead and post it on X, but I really want to understand the numbers behind what I'm about to do and how everything moves. So keep an eye out for my X. I'm going to really dive into how can I justify rolling this call, or do I just let it get closed out and lose my long call and call it a day? So keep an eye out on that. I'm going to dive in on that later. I'll make a next post about it. We're at 27 minutes, so let me go quickly. I know people have things to do. It's Thursday. It's almost 10 a.m. Rocket Lab, Celsius, I'm doing the same thing. Celsius, I am doing the poor man covered call. So I have Celsius is at 29. That's a pretty, anything under 30, I think is decent for Celsius. I bought a $25 call. That one, it was like 26 or 27. I'm up slightly on this still. I paid $651 for this. So as you can tell, if I go back here, I sold a $34 call. Here it shows me $214 of profit, but in reality, it's a little bit closer to like $50 or $60 because this is a rolled position. So again, same thing, poor man covered call. Come January, I'm going to really think about it and say, hey, do I want to own these shares at 25 or do I want to let them go? I drink Celsius a lot. I think it's great. I think their market share is growing, and I think it's a great company. So I'm not too concerned about Celsius, and I have my little lottery ticket there. What else do we have here? Chipotle, $56 put. I really wanted to own those shares. It's at 57. I don't know if I will, but man, I love that company. I'm gonna probably have Chipotle today, to be honest. So I'm keeping an eye on Chipotle. I think that hopefully, knock on wood, they don't have an E. coli outbreak and I can get some cheap shares. Just kidding. But I'm going to keep an eye on it at 55. If it goes below 55, I think I'll be a buyer. For now, I'm just going to get paid $150 for just babysitting Robinhood. Hims, short man covered call. We covered into it, Riot, Tesla. So Tesla. Let me see something here. These are little lottery tickets I bought with Walmart. But I'm still down. Look at that. You see, I bought them way too expensive. I think Walmart is the only one of the few companies positioned to really stay afloat and take advantage of inflation. So I bought just, 3 little lottery tickets to see what was going on with it. Tesla right now is I'm just monitoring Tesla. I've got a few shares. I've got 1,000 shares, but I've got them at 205, expiring in December. So I'm going to let it eat away a little bit more at the intrinsic value, which is time. Extrinsic, if it's at 253.42, and so it's got 4,048.42, right? And then 53.15. So I still have about $500 worth of time of extrinsic or intrinsic value, or the time value. So I'm going to just hold tight. I don't really have to roll it yet. I'm going to hold tight. But what I am going to do when that time comes is when December comes around, I'm going to say, okay, do I want to keep Tesla or not? And I don't care if I have to leave in my will to tell my kids to continue rolling. It's something I'm committed to do. And I will defend these shares until I'm above water. And so what I'm going to do is I'm going to go to January 2025. They expired December 20th, right? So I'm going to say, okay, I'm going to give the market 6 months till April. And let's assume we're shaving $500 or $400 off of this, because that's going to be the time decay by December. So let's say $5,000. It's going to be $5,000. I can roll all the way to 230 for $5,000, right? So $230. Right now we're at 250. If I really wanted to, I could say, you know what? I don't even want to think about this till next year, December. And I'll be able to roll all the way up to $290, $300, you know, and I'm okay with that. So I'm not concerned about it. I'm not concerned about Tesla at all. I did buy 1,000 shares of TSLL because of I wanted upside, but I need to be selling calls on it, because we had a very interesting conversation with NAV degradation or whatever it is, where basically the ups and downs of volatility, in order for this to have a leveraged effect, it needs to be actively managed, right? Because people need to basically position the portfolio to react twice as much to whatever Tesla does. And so that has a cost, and that NAV cost is, it sort of degrades the cost of it. So I was having this conversation with TJ, and he really emphasized the need to sell calls on this, because you need to be bringing money in to justify that, right? So right now we've got 2 sells at $12, which honestly is pretty decent. You know, this is expiring next week, so that's $100, which is honestly my break-even point, which is interesting. But I'm gonna wait for a green day on Tesla, and then which will probably come next week if we have a Trump presidency. I think Tesla will spike, and at that point I'll sell calls. But right now I'm just sitting tight. I've got these little lottery tickets expiring in January 2025. These are already pretty much at 60%, $200. That's pretty much it, guys. It is 33 minutes in. Again, if you guys want to have this, and I had a Crocs here because I was tracking Crocs. It's down $2. So that's pretty much it. Any comments, anything I can answer, let me know. I'm going to really dive into justifying that roll on the SoFi. I really like to understand the math behind it. But thank you all for watching. Hope your trades are green, and enjoy Halloween. Hope you don't see anything scary on Robinhood. And I will see you guys next time I go live. Take care.